Good evening, everybody. I'm Jaival from the Observer Research Foundation. I'm a senior fellow. And on behalf of Observer Research Foundation, we are delighted to welcome all of you to this roundtable discussion titled Bridging the Gap, the Role of FinTechs, NBFCs, and Small Finance Banks in Financial Inclusion and Diversity. It's my privilege and pleasure to welcome Mr. Jayant Sinha, the Parliamentary Standing Committee Chairman on Finance, and with very illustrious background. And our discussion this evening will be curated by Mr. Paul Abraham, the President of the Hinduja Foundation. The way we do is we will start with a keynote by Mr. Sinha, followed by a scene setting by Mr. Paul Abraham. And thereafter, we'll go around the table where all the discussants are requested to introduce themselves and speak briefly about the title subject this evening. And thereafter, we get into a discussion. After the discussion, we will have a press Q&A. We welcome our members of the press who are here to report on this event. And thereafter, we'll have a family photograph, followed by dinner. So without further ado, may I invite Mr. Sinha to deliver the keynote.
Thank you very much, Jabal, and a very good evening to all of you who have braved the traffic of a rainy Mumbai to get here. I started my trip back in Delhi some hours ago, but as is always the case, coming to Mumbai is always very interesting because so much happens so quickly in this city. And of course, very happy to be here in BKC and to see all of the new developments here. Speaking of new developments, if we look at what is happening in the digital financial infrastructure of this country, the developments have come very, very quickly. And I remember when we started in 2014 working on establishing a FinTech, a digital infrastructure, financial infrastructure for India, none of what we take for granted today was possible. And to have achieved all of this very, very quickly is not only something that has been done by design, by a lot of very good planning and a lot of technology work. It is also something that has been the vision of the Honorable Prime Minister, and then, of course, our two Honorable Finance Ministers, Shri Arun Jaitley ji and Srimati Nirmala Sitharaman ji. So all of this has been accomplished in a very planned and thoughtful way over the last 7 or 8 years. And I think what has been accomplished is nothing short of miraculous. Nothing short of miraculous. I want to highlight 3 aspects of this, and I want to conclude this by telling you a little bit about what the future might hold. Obviously, then we will have a go around, all of you will present your views, and then we can continue through an interaction, through a question and answer session as well. But there are 3 aspects of what has happened, I think, that are truly notable and have been recognized and noted around the world. The first aspect of it is that the government has done a very sort of sophisticated and well mapped out provision of digital infrastructure, digital public goods, if you will. These include, of course, 3 very important elements: Aadhaar, then obviously the provision of universal bank accounts so that everybody has effectively a bank account, and then thinking through very carefully as to how these digital public goods could be brought together to create a full payment system, which is the most affordable payment system among the highest volume payment systems in the world, is nothing short of a miraculous delivery of financial infrastructure. I don't think any other country, except perhaps for China, that could match what we have accomplished and the speed and the volume of how it's been done. So the first aspect of it is a very well planned out, well mapped out set of technology standards and financial rules and regulations that have enabled us to put in place an extraordinary digital financial infrastructure. So that, I think, is something that many countries around the world are looking at what India has done and seeing India as a role model for being able to put this together. So that I think has been the foundation for what we've done. The second aspect of digital public goods and this digital financial infrastructure is the innovation that it has unleashed among startups, among larger companies, and the entire economy as well. By putting in place these digital public goods and this very affordable, high volume, and reliable digital financial infrastructure, the innovations that we are seeing across the board have not only resulted with many unicorns, they have also resulted in customers now getting the services that they couldn't only have imagined of. And so, again, if you look at the innovation that has happened, there are innovations in payment systems, there are innovations in investing, micro investments, being able to access insurance, being able to access investment products, and there have been innovations also in financing. In each of these different areas, payments, financing, investments, we are seeing companies come forward with products and services that are extraordinary and have been very powerful in bringing new services, new financial services to our consumers and to our businesses. So the digital public goods have unleashed this incredible set of innovations in our fintech sector. So that's the second aspect. The third aspect I want to touch on is what we see going forward. Now, what we see going forward really are two or three areas where I think we can see even more remarkable progress over the next few years. The first is that the digital public goods that we've developed, the financial infrastructure that we've developed, will enable us to digitize other sectors of the economy in an equally revolutionary way. Health is an example. You must have seen the standards that have been laid out for what we can do in terms of public health, in terms of public health records, payment systems, billing systems associated with public health records. That's an example of how in one sector we are taking this digital infrastructure and building on top of that and delivering even more innovative products and services. Just like that, as another example, I'll tell you about DigiYatra, which is a system that we developed when I was in the aviation ministry. Again, builds on the same stack, the India stack that people have spoken about extensively, but it uses Aadhaar as a way to give you a digital boarding pass. So when you go to the airport, you will, once you've enrolled yourself, you will not need a boarding pass. You just basically present your face becomes your boarding pass, and then you get access to the airport, you get access to the airplane, and you continue your travel without any trouble at all. So that is a way in which we are building on these different these different digital public goods that have been created. So we are seeing very interesting innovations that build on top of the India stack. That's one aspect of what is happening. Another element of what is happening is ONDC, which of course you're all familiar with. What ONDC will enable us to do is to really open up commerce in a way that has not been possible in other countries. By creating the standards for ONDC, we are enabling digital commerce, e-commerce to happen without necessarily being bottlenecked by certain gatekeepers. If we can enable that and make that happen, and I'm very optimistic about that, that will again unleash further innovation and make things a lot more affordable for our consumers as well. And it's a very important and exciting step that the government has taken and is proceeding on right now. So ONDC, I think, is going to be even more revolutionary than UPI because it will really open up and enable e-commerce in a way that we haven't seen anywhere else in the world. The third element of what I think could be very powerful for the future is what the Standing Committee on Finance has recommended as a Vyapar credit card. So just like we have a Kisan credit card that enables revolving credit for our Kisans, and there are some 7.5 crore Kisan credit cards out there, we have about 6 crore MSMEs MSMEs in India. And they, of course, find it very difficult to access working capital. They find it very difficult to access revolving credit for many, many reasons that we are all very familiar with. But if the government, with a full digital infrastructure that digitizes their transactions, digitizes their invoicing through GSTN, and then, of course, building on top of TREDS, which is a factoring system that we have been working on as well, we can take the Vyapar credit card and really use that as a way to formalize and digitize the MSME sector as well. So I think that's a third area that could be very revolutionary, because it will enable revolving credit, establish much better digital financial inclusion for the MSME sector, and enable them, therefore, thereafter, to be able to get financing at a much more affordable rate, because they have built a full digital paper trail of their banking transactions. And we could move from asset-based, collateral-based lending to flow-based lending. And that could be revolutionary for the MSME sector as well. So as I said, what we have accomplished is nothing short of miraculous as far as digital public goods and our digital financial infrastructure is concerned. And that's based on, of course, what has been done through the digital public goods like Aadhaar, universal bank accounts, and UPI. That has enabled enormous innovation in many other sectors, like in health or in aviation that I mentioned. And I think going forward, I think these are the three areas that I would be paying attention to see, how things get to be even more interesting going forward. ONDC, the Vyapar credit card, and so on. So all of these, I think, portend very well for even more digital financial inclusion, even more products and services for our consumers, for our small businesses, and I think will really position India at the very cutting edge of FinTech and digital innovation as far as the financial sector is concerned. So that's a quick summary, if you will, of what's been happening over the last few years and what the next few years might bring. As you know, across all of government and, of course, the legislature, which I represent, there is a concerted effort to continue to work on all of these different innovations from a policy perspective, from a markets perspective. The regulators are very, very sophisticated and very aware of what's happening around the world, what India needs to do to continue to be absolutely at the cutting edge and to be competitive in this regard. And so we are getting a tremendous amount of support from our regulators, whether it's RBI, whether it's SIDBI, SEBI, and so on. Of course, the government is very, very committed. The Honorable Prime Minister has really driven this whole set of efforts. And as far as the legislature, particularly the Standing Committee on Finance is concerned, we have also sought to play a role in terms of the legislation, the policies and the rules that have been crafted to spur the sector forward. The Vyapar credit card is an example of that. Thank you very much. Happy to continue this interaction as we continue the session. Thank you.
Thank you, Mr. Sinha. May I now request Mr. Paul Abraham, our curator for the discussion this evening, to do the scene setting and take over.
Thank you so much, Mr. Sinha, and thank you, Jaybal. It's really from a place of positivity that one will, kind of set the tone here. There is no denying that in these past, say from 2016, if I have to take that as a benchmark year, especially for digital payments, etc., I would say that what we have achieved is nothing short of spectacular. In terms of the Jan Dhan penetration, in terms of the level of UPI payments from literally zero in 2016 to probably about 8.5 lakh crore a month of payments, digital payments. So that's a huge leap. 450 million bank accounts is, I don't think any country in the world has had that kind of growth in that shorter window. So therefore, I think we have to laud what has gone on and what has been achieved. Having said that, I think it's literally a case of we've achieved so much, but we still have more to achieve. And I think a few places which I'd like to touch upon is that when you talk about 450 million accounts, I think a little bit more of a deeper dive in terms of how much of that is truly urban and how much of that is truly rural. We still have 190 million eligible people who don't have accounts. And we have about 5 crore out of this 45 whose accounts are dormant, so there's no activity there. And these are large numbers. And I think we'll be well served trying to study that and working on improving that level of penetration and activation. That's one part. The second part at a very philosophical level, and this comes from some of our experiences where, we have Bharat Finance, which was a company calling in on at least 100,000 villages once a week. And what we do find is that while the woman fronts most of the activity, the beneficiaries are really, in a very non-subtle way, the males. And therefore, how do we address this whole issue in a genuine way? This whole gender bias issue, which is there. This gender bias extends also during COVID when we had, a very large education outreach. And the way it played out was in the first few months when everyone was home, about 65% of the children had access to a phone. Within the next few months, as COVID started to kind of taper off, suddenly this number dropped to about 30% because parents were out and they were carrying their phone with them. And then we have a situation where one bunch is fairly actively engaged digitally, another bunch is peripherally engaged because they only have a normal phone, they don't have a smartphone, and then there's about 35% who had no device. So the whole concept of the last mile and how do we address the issue of the availability of the device, who controls the device, how do you create the level of literacy required to operate, understand schemes, etc. And I think that's something that is out there where a lot more work needs to be done. Then there's this whole issue of converting cash to digital. At the last mile, there is still a struggle on converting cash to digital because the average Kirana guy still wants to be paid in cash. There are fears about his commerce suddenly becoming trackable and therefore eventually, causing him tax liabilities and things like that. So there is a resistance there, but I think, this doesn't take away from the fact that you will now find in the deepest of rural communities, QR codes and, the ability to still do Google Pay and things like that. So there is no denying that there is progress. I'm just highlighting some of the issues where we need to probably focus our attentions going forward. Another thing which I find, because I have some land which I farm in Karnataka, one of the problems that we have is the land documents. And, Mr. Sinha alluded to how we will transform, especially in healthcare. I think there are many areas like that where if we digitize a one removed set of documents, fundraising against digital documents then becomes that much more easier. And so therefore, is it something that we can look at, to digitize a little more faster and incentivize the conversion into the digital avatar, so to speak. I think there are places now, for example, there was the experience of Korea where they talked of tax breaks to help people along, the ability to maybe sometimes refund charges. The banking system is still, struggling with how to, charge at a unit level. And sometimes for a 100 rupee transaction, 60 rupees is the charge, and that doesn't work. and the people revert to becoming more in the cash form than the digital form. So those are some of the issues which we need to address. So there's a bunch of things which are, more micro issues. I mean, I have a list and I leave that with Jaybal, and he can pass them on to everyone around, and I'm sure we'll hear of a lot more as we go around the table. There are some philosophical issues and some micro individual corrective action that will help us along. I think, kudos to you, sir, and to the, government for what you have achieved. And I think in the spirit of what you've achieved, I think these are just some of those recommendations for, for us to really, if we go at the pace that we did from 16 to now, I think in another 4 or 5 years, some of the basic, platform that will enable every other version of digital transacting will be complete. There's one last issue which I want to leave on the table, and that's this issue of, are the components of this marketplace talking to each other and collaborating enough? Because that was one of the questions that Jaybal had raised. The FinTechs brought creativity, the FinTechs brought the ability to transact at a low unit cost. The FinTechs bought access. The small finance banks bought local market knowledge, the ability for vernacular, things like that. NBFCs had the ability to churn capital a lot better. Yet, are these people working together? And in some cases, are they getting the right sponsorship for some of the issues that they deal with, whether it is KYC, whether it is the credit validation and track record. So are banks the right partner? Should banks be a kind of a sponsor partner for some of these entities? Those are the kind of issues that we need to also talk about. So without further ado, may I go around the table, and Sairi, may I ask you to respond?
Thank you. Thank you so much. Really honored to be here. And I couldn't agree with the context Mr. Sinha shared and you shared. A little background about me. I'm a first-generation founder, built my first company in the .com era, 99, 2000. And since then, have been building consumer internet. Last 7-8 years, I built an entire ecosystem dedicated to building online communities for women. And the focus was employment and entrepreneurship for women. And we got about to about 25 million women who became part of these networks that we created. When COVID came, obviously there was a lot of financial distress, and we heard a lot of ask for help. And what was a small project to give out literally, some loans, now has become Mahila Money, a full stack financial services platform for women. And we work with women entrepreneurs of all shapes and sizes. So whether it's a home baker selling on WhatsApp, and I think going back to what Mr. Sinha said, this wouldn't have been possible a few years ago. I've been working with women for about a decade. There was this wall that wasn't broken. COVID broke that down. I think digital adoption went up. So today, we know in India, a lot of women are not part of formal workforce, but the informal adoption of payments, UPI, and the whole stack has enabled every woman to be an entrepreneur. So we work with a range of them, home bakers, tailors, beauty parlor owners, online resellers, and so on. And we enable access to financial products for them. Very small loans, as small as 10,000 rupees to, let's say, 5 lakh rupees. We enable insurance, prepaid cards, a whole stack of things for these entrepreneurs. And I think we're at the beginning of probably what could become very, very formidable global model. Nothing like this exists anywhere in the world. And these are models that once built can be taken to LATAM and Africa and other parts of the world. But we still are very early in this journey of building out, and like you said, there are a lot of sub parts we need to work on: risk and KYC. How do you, for example, very small thing, we work with women who don't have PAN cards, so how do you underwrite the thin file customer and a whole lot of that? How do you connect the dots and get to know your community a lot better? India has a historic tradition of doing this. We have Amul and microfinance and so many of these successes. We have Chetna sitting here, who's an icon in building that. So I think there are a lot of learnings from what we've done, but a lot of innovation needs to be aligned. A lot of digitization of what exists offline and has worked in the past. So whether it's a postal service, or whether it's cooperative banks, or whether it is on offline commerce models of women artisans. So I think we're a company that's trying to chip away at that. It's a big ask, but we're excited about where we sit today, because every day we see that change. Every 100 women we give a loan every day to, we know that they're going to go do something with that money. They're going to increase their income. They're going to put their identity on the table and go from there.
Thank you. Arun?
Things which are happening for last many years, and this comes from my experience in NABARD in the banking sector for about 25 odd years, and then 5 years in NGOs, and also NTDB, the dairy she was talking about. There are 3 or 4 things which we need to be aware of. Financial inclusion doesn't necessarily mean credit, because at the end of the day, unless a bank has a credit deposit ratio, a CD ratio, we don't do anything. The second thing is in terms of awareness and risk, managing their own risk. If you're looking at, and I think Alok should bail me out, but about 80% of the microfinance at this juncture in this country is concentrated in only 100 districts. The 540 rest of the districts don't have that much credit which is being dispensed. How do we go there? That is the second part of it. I'll give you a small example. I was in Udaipur district. I used to be a banker about 3 years ago. I went to the Udaipur district in Tripura, not the Rajasthan Udaipur. And I was speaking to a microfinance customer. She used to borrow about 50,000 from MFI, ASA in Calcutta. And one fine day, we went for the meeting, typical MFI meeting, and then I went with her. She said, have a cup of tea with me. And then she said, can you give me 3.5 lakh rupees? I said, what will you do with that? He says, the government of Tripura sells bamboos only once a year. If I buy that, my income goes up straight 50%. And those kind of things, she's not MSME, she's not SME, but that is a requirement which possibly we have yet not fulfilled. So that is one. But then I asked her, do you understand the risk involved? 3.5 lakhs, how will you pay? And she had not thought about it. So when I'm talking about awareness, when I'm talking about financial inclusion, the risk-bearing capacities of the people is something which is totally missing. The second, these 100 districts, which I was talking about risk, or Chetna madam should bail me out on this. There are a lot of people who have been beneficiaries of financial inclusion. They have money, but they don't have the avenues, or they don't know about the avenues to put that money back into the system. And that is something which, in terms of financial inclusion, we need to make them aware and give them opportunities where their surplus, it should not go under their bed. It should come back to the system where they can invest money. That is the second part. The third, in terms of the urban women or peri-urban areas, I have come across cases where very literate women, they don't know about financial inclusion for the simple thing, if their husband died, they didn't know what to do with the money, where to get the PF and where to invest it. There again is a financial inclusion bit. And fourth, this whole gender sensitive thing. But we deal with farmers, and farmers, they don't hedge their risks. When you are talking about hedging their risks, their incomes are very, very cyclical. And government has fortunately come out with this whole FPO model. When we are talking about the last mile, this 10,000 FPOs translate into something like 50 lakh farmers. And that is one new, channel available which has not been captured. There are 2 earlier channels, the regional rural banks. Cooperatives are much maligned, but cooperatives and regional rural banks, these are again 2 channels which FinTech companies can collaborate with, which has not been tried, and possibly that could be a channel to use. And the last bit, in terms of, I was very happy with the ONDC bit. But the same thing when we are talking about ONDC, the whole branding bit, And that is something where the awareness needs to come in, building the brands of people who can come together. So she gave the example of Amul, and I was in the whole dairy industry, how they came up, and that is something, none of the people in the dairy industry and any of this FinTechs talk about here, but Amul doesn't pay cash. The account, every 15 days, the amount gets deposited into the accounts of any of the dairy across the country. The whole cooperative sector, the much maligned cooperative sector has done this. All those 40 lakh, entrepreneurs in dairy, in Amul, they get their accounts credited every 15 days. So if they could do that every single place, Moderator does that, Saras does it, Nandini does it everywhere. So this is something which we need to highlight. And they also put money in their banks. They are saving also. The credit deposit ratios in the districts where dairy is strong is pretty good as compared to other districts. Thank you.
Thanks, Shishir.
Yes, I'm here to listen, but more importantly, I think what has happened with the digital payments revolution is that in a large measure, the problem of access, the first steps have been taken. People who otherwise were unbanked have access to the financial house, as it were. And I think the next step is, can they be made a part of the credit delivery system? So for instance, it happens for MSMEs, it's happening. The Vyapar, credit cards will be there. But the small kirana shop guy, the vegetable vendor, if he is accepting digital payments, can that flow-based lending system come to him? And that would probably be the
that is the vision of the Vyapar credit card. So
Okay.
it is to be able to get a revolving line of credit to the smallest enterprise, the smallest business. A thela wala, a beauty parlor, a small workshop. So because today, of course, the thin file customer problem is there, but if we can digitize what they're doing. And gradually over time build up the sort of transaction history, not necessarily the credit history, then we can continue to formalize the MSME sector faster, quicker. So that's the idea behind the Vyapar credit card. Just so that I clarify it a little bit further. The idea is that for that lady, for example, in Tripura, who wants to be able to access a 3.5 lakh loan, the risk factor is a different issue. But the incentive for her would be that if she registers and formalizes herself through the Udyam portal, then she gets access to this line of credit. Then she enters the sort of digital arena. She starts to formalize her transactions. And just like Amul has done, as you were explaining, you start to then enable all of these people to get access to a whole host of other products and services and digitize their lives. So the idea of the Vyapar credit card really is the carrot that will enable people to formalize what they're doing. And then, of course, you plug them into, the PAN system, you plug them into GSTN, you plug them into TREDS. All of these things then come into play. And then, of course, you can provide credit guarantees, you can provide loss guarantees. All of that SIDBI can do. You can provide concessional financing. Everything that we're doing in the agricultural finance system, which you know well with NABARD, we can start to do as well for Vyapar credit card. And just very quickly, just to clarify it a little bit further, today I think NABARD has a balance sheet of about 6 to 7 lakh crores. And it is serving about 18 or 19% of GDP. On the other hand, SIDBI has a balance sheet of about 1.5 lakh crores, and they are servicing about 30 to 40% of GDP. So if we really want to enable the MSME sector in the same way in which NABARD has played such an important role in the agricultural finance sector, we've got to really strengthen and build up SIDBI the way we've strengthened and build up NABARD, which really means that we have to pump equity, which means, and this was one of the recommendations from the standing committee, is that we have to start to put 10 or 15,000 crores a year of equity capital into the SIDBI balance sheet so they can lever it up and start to become the financing provider, provide the wholesale financing to the MSME sector. But all of this is possible because of the digital financial infrastructure that we've been building. So I just wanted to clarify that because we've actually tried to think through it as an entire digital financial ecosystem for the MSME sector, from the somewhat larger MSMEs right down to the smallest one-person sole proprietorship.
Yeah.
Okay. So good evening, everybody, and good evening, Sinaji. I would like to, I am representing Microfinance Institutions Network, the self-regulatory organization which comprise, I will start with the last point which Paul ji mentioned. Is there a coordination? So our members are banks, small finance banks, NBFCs and NBFCs. So it is a 120 member based institution, and they all active into microfinance lending. So there is coordination, very active coordination. Now, coming to the digital side of it, before I get into the digital side, let me pan the all India picture of what the sector has done over the years. Because globally, I have been talking, I have worked across 22 countries in microfinance, and globally, everywhere you go, there is a misconception that everybody, when you talk about microfinance, talk about Bangladesh. But India has gone leaps and bounds ahead, both in financing structure, operational clarities, operational efficiencies, regulatory clarity, digital inclusion, and all that. Today, the entire sector of all the institutions serves 60 million women borrowers across 632 districts with a loan portfolio outstanding of 2,90,000 crore as we speak today. That's a huge and humongous contribution. And I would like to later on present the, we just completed a report from National Council of Applied Economic Research, because there are a lot of client level impact stories, but we could not get what is the microfinance overall contribution to India's GDP. So this study, through an input-output model, the NCR has tried to, I will present it to you, sir. It says that the contribution of the microfinance sector is around 2.5% to India's gross value add, and total financial sector includes the BFI sector is 17%. And if we keep on growing by 25, it will be 5% of the GVA. Now, coming on the digital sides, there has been a humongous achievement coming from 2014, 2015. And today, again, Paul, you to referring back to your comment when you talked about dormancy of account, out of our 60 million clients, nowadays 99% of loan disbursements are happening into the bank accounts. So I am not very sure about that so many eligible customers are not having bank accounts, because in microfinance sector, the 60 million clients outstanding loans are there, and roughly around 59.5 million loans have been, clients' loan have been disbursed into their bank account. So this is a cashless disbursement. The other part of the story is that in 2011, when we started setting up credit bureau for microfinance customers, we were laughed at. That each small borrower, so many numbers, how will that credit bureau record? Today, all the 4 credit bureaus host all the microfinance borrowers' credit history record, and they have their own credit score. India is first of its kind. Nowhere globally it has happened. I am very proud to say that. Third is when the loan officers now, when it goes to the field, they do the assessment. They are going with a tab. They are inputting the basic details, doing the online Aadhaar-based credit verification through the credit bureau check. It syncs with the credit bureau, gets that okay, then it goes to the head office, and immediately the loan is sanctioned or rejected, and the loan is disbursed next day into the bank account. That level of digitization has been reached. So that's a very proud part which you could not have imagined, say, 5 years or 6 years back. Now, on concentration, I think Arun raised the point of concentration of microfinance in few districts. Out of 632 districts, I agree, around 55% to 60% now, portfolio is in 100 districts. And that was primarily, I kept arguing with the Reserve Bank governor, that the conditionalities of strict pricing cap, which was on NBFC MFI, that was preventing the institutions from cross-subsidizing their work. Nobody would want to work when there is a price cap of, say, 18% or 19% to work in a far-flung area. Better to work in a densely populated area and lower down your operational cost. Now that has been taken care of, and within 1 to 2 years, you will see that concentration will be taken care of. Now, on the market potentiality, because we have to also, what we have done is okay, but we cannot rest on our laurels, because we at institutional level, when we sit with all the banks, NBFCs and NBFC MFIs and small finance banks, we see that the microfinance market, addressable market, is somewhere to this tune of 25 crores to 30 crores. We have still reached only 6 crores. So huge work is there, and I'm sure by 2030 we should be able to address a sizable chunk of that. And on the formalization part of Sinaji was talking about it, the current problems which the sector is facing, which we have been raising with the regulator, with the Reserve Bank of India, but they are coming back to us saying that this is a Supreme Court judgment, because the NBFC MFIs, the NBFCs, we are not able to use the Aadhaar as an eKYC, sir. So because there are a lot many restrictions going on, banks can use, but hopefully that can be taken care of. That will boost the formalization to a large extent. And the second problem which we are facing, so the whole sector, the recent you referred about the Udyam number issue, and with 6 crore clients who do not have that functional literacy to go on the app and fill the Udyam number. So we have been talking that we are not against the policy intent. We agree that more you formalize, easier it will to reach them, easier it will to build their digital history and lend to them. But it has to be done in an assisted model. Somebody has to go there and work on that Udyam number. So we wanted, we have talked with the government that kindly give us some timelines, some flexibility. Luckily now SIDBI is working with us to devise a bulk upload of clients. So hopefully in next 1.5 years, all the clients will get uploaded on the Udyam number, and that formalization coupled with, if the eKYC thing also happens, all other pieces in digital thing have been solved. Digital disbursement, digital credit history check, digital repayment collection, which needs to accelerate. I think we are on a brighter path. All the regulatory issues have been taken care of. Digital issues have been taken care of. Now it is for the sector to redeem the trust of the policymakers and fulfill the dream of inclusion. Thank you very much.
Thank you very much. Go ahead, Malini.
Yeah. Hi, thank you so much for inviting me. And I have a few questions for this.
Yeah, we can hear you.
Yeah, you can hear me?
Yeah.
Okay. I have a few questions, and there's no doubt that, as Mr. Sinha mentioned, that the digital infrastructure created by the government is phenomenal. The UPI system has, created business models for people in the hinterland, which was unheard of before, even 5 years ago. However, I have a few concerns. Whether it is, access to credit has improved dramatically. There's no doubt on that. Enormous numbers of people today have access to credit. They are new to credit customers. It's a blue ocean. While there is a blue ocean opportunity here for players, many of them are in this room. My question is that, is regulation keeping pace with the dramatic shift in business models? In the evening, just before we came into this room, we were talking about regulations that are required because a lot of these FinTechs today do not have a physical model, and they are primarily online. What about consumer grievances? When a consumer has grievances, they don't know where to go, whether it is an Uber or it is a Clear Trip or an Ease My Trip, or it is a financial services provider or a FinTech. We've seen the RBI reacting to some of the illegal digital lending apps. But the sense I get, having looked at this space, is that it is a more reactionary form of regulation than a proactive. While innovation is happening at the pace of thought, literally, in this space, India is pretty much the cradle for a FinTech revolution for the world, not just in India. As Mr. Mishra mentioned, whether it's the MFI space or it is UPI, we are leaps and bounds ahead. Then why is regulation so reactionary? That's my first question. If anybody could, in this room, throw a light on the government's perspective on consumer rights and consumers' interests, what kind of regulations are being worked upon so that the consumer's interest is paramount and is protected through regulations. And my second is that with comes enormous amounts of consumer data today is sitting with various digital service providers, whether it's consumer tech, whether it's FinTech, whether it is, e-commerce. I think it's about time this country talked about privacy laws, because that again is something which is lagging. I have an issue giving my facial recognition, permission for facial recognition to various third parties, barring Aadhaar. Maybe I have no choice, and Aadhaar is a revolutionary, again, development in this country in the way things are being used, the jam trinity. There's no question about its application. But there has to be guardrails which need to be put in place so that interests of 140 crore Indians are protected, and tomorrow they will not be misused. So I think that these are the kinds of things, that questions which I raise, I'm not able to get very clear answers on this. And if anybody in this room can throw light on that, I'd be absolutely delighted. Thank you.
Thank you. I think before we just jump into the next thing, I'd just like to summarize 2-3 points so that we don't forget them. One of that's come is from Arun is this whole issue of location-specific supply chain because of mismatched earning and expense cycles. And I think, the world of FinTech and the technology at the rate at which is moving, I know that there are one or two guys I work with who are working on it, The other thing is in terms of, penetration, Alok, I was wishing you'd comment something about the frontline BC infrastructure and how that can be penetrated much more. It could also be used as a way of addressing the whole issue of the gender bias, because if the BCs happen to be women, by and large, then they would first get educated, and then the familiarity with products, usage of technology, etc., would be much better, because there's still that gap between what technology provides and the ability to access. Okay? Price caps being a challenge, I think that is largely, to some extent, been addressed, right? Yeah. I think the points you make are valid, and Malini, because that is a debate that's ongoing, but I think it's reached a critical mass now where it has to be addressed. So I'll make a note of these in due course, and Ritesh.
Yeah. Hi, this is Ritesh from Flexi Loans. We give loans digitally across India, as Malini was trying to portray all digital lenders into one bucket. But we operate truly in regulatory, means within regulations. We are RBI registered NBFC. And Arun was giving story of Udaipur from Tirupura. I'll give story of actual Udaipur. So there was our customer. I was on field visit, and that person took loan of around 5 lakh rupees. Our average ticket size is 5 lakh rupees. And that person was not having courage to walk into a bank branch, or probably bank branch had denied giving loan to that particular customer, and we gave loan to that customer. He bought a small shed and set up a business around that particular place. He was already having a business. He expanded business to next level and employed 5 other employees. And that's kind of impact we do, and I'm very proud of it. We give loans only to businesses. We don't give loans to personal loans. We have given loans of around 2,500 crores till now. We have been huge beneficiary of this digital penetration because we had set up our entity in 2016 when all this revolution, UPI, everything was going on. And we do 100% of flow-based lending, what Mr. Sinha used word. We coined this word along with Nandan Nilikani in the first research paper that was mentioned for flow-based lending, because we have been doing flow-based lending from very beginning on this particular piece. There was one other topic around whether there has been partnership with banks on this particular topic. Rather, in our case, we are not only giving loans to businesses, we give 50% of our loans along with partnership with banks. We are NBFC, so there's no competition between our company and banks. Rather, we want to grow hand in hand with banks. Banks can supply capital, and while we can do origination, and we can, because we have wider reach, banks cannot do, the cost of lending will become very high if you open a lot of branches, and 5 lakh rupee loan you cannot give, or 2 lakh rupees loan you cannot give by opening a branch, doing a physical PD. We are reducing cost of transactions and enabling that loan, which would not have been given otherwise. 2-3 issues that I would like to highlight, which can be addressed, that will be very great. Though we give loans to MSMEs, right, the real problem is to proving that we are giving loans to businesses. And we are not beneficiary of any of the government scheme that is going around after doing so much of work after 6 years into operations. For example, even KYC norms. If you give loans to businesses, you have to give 2 KYC, or you have to do physical CPV of the place. It's not very friendly. Even for personal KYC, like if you do Aadhaar-based KYC, you need to do like photo selfie kind of stuff, which makes it even more complicated, because if you're doing something digitally, there would be drop-offs, and it's not practically possible to do everything digitally. So KYC norms should be simplified to increase the coverage for MSMEs. Any scheme requires, that Udyam is a wonderful initiative, but 90% of our loans are being disbursed into current account. Now, current accounts are opened by businesses. Why? To prove that, okay, this is a business, because KYC verification has already been undertaken by a bank for opening current account, but we have to prove that we are giving loan to businesses over there. Most of our loans are to GST users. Now, person is a GST, but still we have to prove that we are giving loans to businesses, and we are not beneficiary of any scheme. Our cost of lending is 13-14%, while banks' cost of means if we are giving loan to businesses, priority sector lending, we can reduce our cost of lending to 7%, further give more and more loans. Even third and final point is this Mudra scheme, which Government of India is having. It is on the, and you mentioned SEDBI is a great institution, but they have all those regulations that the benefits will be given only to those entities which are profitable. Now, as startup FinTech, we are not a profitable entity, so those benefits are not extended to us. So just simplifying means we don't want any other additional scheme or any other additional benefit from government. It's just that whatever benefits are there, just simplify norms so that businesses can be identified. We are giving loans to businesses, and we should be beneficiary of such schemes. Thanks.
Thank you. May I request that we speed up a little, because I think we'll be otherwise short of time, won't be able to hear everyone.
I think you picked the right person for that too. Vijay Sapani, Toronto-based. We run a family office. It's multi-billion-dollar, and we are invested in about 30 countries. Originally from Chennai, so I've been spending the last 2 years in Chennai. We run a family foundation primarily focused on marginalized communities. Our investment is heavily in healthcare, getting into startup in India, which is what we do otherwise. India is a very, very interesting country. I mean, I'll tell you, people in India also don't appreciate it. I had to learn how to use GPay and Paytm from my driver. And, people think you're from foreign and, wow, this guy is lying. He doesn't know, he's not telling the truth. But the fact is, we don't have this. We don't have these kind of technologies in Canada and US. And to your question about regulation, when there is no sounding board ahead of you, regulations sometimes have to be created as you go. This is like you're building your boat while you're actually sailing. This is not building a boat in the harbor and moving forward. And that doesn't mean that regulations cannot be made and should not be made, but I think India is way ahead with some of these digital technologies compared to the so-called developed countries, that mistakes will be made. And I think most importantly, you have to learn from your mistakes. The critical thing is data is wealth. And I think for a country like India and China, data is massive. India is highly underbanked and highly unbanked. Despite all the growth and success that India has had, and it's still hard for me to fathom the level of growth. I haven't been in Chennai since '92, and the changes that has come is tremendous. Still learning from my driver, from my cook, from my maid and everybody. But when you look at inclusion and diversity, that's where the real question comes, is where has it gone? How has it reached? And data is very important. And to some of the points that has been talked about, if you digitalize your land paper, if you digitalize data, then healthcare, 2% of Indians have mutual funds, maybe 4% have insurance. There's about 400 billion in missed MSSME. After all this significant growth, even today, Indians' wealth is held in cash, gold, and land, and that is not even leveraged. Leveraging for business and income is the most aptly used in developed world, and that is how countries have actually become developed in the long run through government policies. So I think it is two ways to do is, how do you educate, and what have you done successfully in penetration? For example, if you look at India as one of the most robust grassroots policies when it comes to polio eradication, which is people going door to door, which is education. How do you take that knowledge and convert into digitalization of education across India, door to door? One, that will also address the issue of gender, which is big, because women are getting left out, largely because of cultural barriers that you cannot change overnight. A lot of women don't have documentation. And it is also regional issues. So I have about 20 staffers at home. Half of them are Tamil, half of them are from West Bengal. None of the Bengalis have even a PAN card. They don't have GPay. They don't have any of these. But all the Tamil people are like so advanced. They'll be teaching me about these new apps that I have to really keep up with them, that I don't look like I'm left out. So it is also, India is not technically India. It's a massive country. The southern states tend to do better, largely because of education, maybe state, provincial regulations. India also has done very well with reservations. And people have their own comments on it. So you can use a stick and a carrot method. Go to these NBFCs, FinTechs, and say 5% of your clientele should be women. 2% of your clientele should be in BPL or poverty. And you can use it to say, if you do this, we'll give you X% of tax rebates, or we'll give you, if you don't do this, we'll punish you with so much of things. These are models that have seemed to work partly in India, but largely in Western countries also. And in a country with such a mass base, people are bound to be left out. It is going to happen. But the real question is, how do you really strive towards getting there? The one model we've really, really discussed quite a bit in Canada is when Prime Minister Narendra Modi talked about you should have a toilet if you have to run for the president of Panchayat or something. And I never figured what that meant. It's a cultural thing. When we actually asked about it, there was such a fantastic policy that we realized is amazing. So it is not just technology. India has also got a lot of cultural depth and significant success in the past that needs to be used. I'll leave with a couple of quick comments on tapping into technology. So technology is very, very important, and it is significantly gone digital. I can go to every nook and corner. I can go to this candy shop guy, pay with QR code, and all that stuff. It has come. But what happens beyond that is always a bigger question. Most of these people at what I call the poverty level, if you want to call that, don't have a savings account, don't have, they live on day to day. So I think there is a significant opportunity. The roadway and infrastructure has been laid. Now it has to be built onto it. The new credit card systems that the Minister was talking about are fabulous. The real question is, how do you make sure every citizen of India is going to get access to it? And how do you make sure women get access to it? That is a more important thing, because women automatically get left out, even in urban centers today. I'll stop with that, and when times come, I can probably comment a little bit about privacy and consumer rights a little bit later.
Thank you.
The technology practice at Trilegal. I won't take too much time because I know people don't like listening to lawyers too much. But just a couple of points, and I think I just want to move away from talking about the regulated entities in this space, like the NBFCs and the banks, because I think one really important aspect in terms of financial inclusion is, like we've been discussing, the role of technology. And just as somebody who's been working in this space, both from a policy as well as a regulatory perspective, I think what I've actually seen is that there is a fair amount of uncertainty, in which we're walking, right? Because the benefits of technology and the fact that last mile is really solved by that, or customer acquisition, or finding various use cases, even within traditional models that now have not been penetrated by the traditional systems, is only happening because of technology. But there seems to be some amount of skepticism, and rightly so, right? Because it comes with a fair number of harms as well. So if I just were to sort of reflect on the regulation, right, and how it's happened, I think there is clearly an indication of how, even when it comes to outsourcing, or the fact that there's a recognition of these kinds of arrangements, that the adoption of technology is extremely important. But I think what would really help is to be able to see technology partners find a place in the ecosystem to be able to talk to the other participants. And the reason I say this is because, again, just based on observation, a lot of what you can and cannot do, right, to contribute to financial inclusion is often contained to the immediate banks that you're talking to, or the NBFCs that you're talking to, or the risks that they're willing to take, right? But in terms of a framework, there's a fair amount of uncertainty. And just a couple of examples to allude to, people have varying opinions about it, but as the Minister pointed, ONDC, I think, just the fact that it's been so iterative, the fact that everybody knows about it, is a framework that people want to adopt, want to participate, explore how they can participate in. Similarly, I think another model that is really good is DEPA, right? Because it's It's an account aggregator model. It's data empowerment. Again, there's certainty about what you can do, what you can plug into the ecosystem. So I think just in terms of fintechs and the amount that can happen, if there's some certainty on the bounds and what exactly are the harms that the regulator sees that should be addressed, because I think it rightly should be, it would really help to, I think, really innovate and exploit the space a little bit more. And that's actually the limited point I want to make.
Thank you. Aparajita?
Lead the FinTech practice. I work with a bunch of digital lending and digital payment companies to help bring their product live in accordance with regulation. Okay, now I'll go very quickly. I have a few suggestions in terms of how regulation can enable the FinTech ecosystem, not only for the FinTech entrepreneurs, but for the borrowers, for the depositors, and for the merchant ecosystem itself. The first suggestion I think I have is on the digital lending platforms itself. I think the problem statement is very clear. Say a credit card company relies on three kinds of borrowers: revolvers, transactors, defaulters. The credit card company is incentivized to keep me in a debt trap because me as a revolver, where I pay the minimum amount due, push the repayment to the next date, it earns that kind of high interest rate by me revolving my credit. That revolving borrower is going to offset the cost of the credit card company in acquiring a transactor, someone who pays their bill on time, and offsetting the cost of a defaulter, someone who never pays, and the bank has to go and take that as an NPA on their own books. What a digital lending platform does to offset this kind of high customer acquisition cost and sort of perverse incentive where you're incentivized as a lending entity to keep the borrower in debt is to lower the customer acquisition cost. They're not sending you a card. They're not giving you a loan of 50,000 rupees. They're also charging the merchant a slightly higher fee. They're telling the small kirana guy, hey, I'll charge you an MDR, a merchant fee of 4% instead of a free UPI. But your cart conversion rate will increase. Your average order value will increase. Essentially, your revenue will increase. I'm going to give you a better revenue if you take this digital lending product, this buy now, pay later product, and you offer it to your consumers. To your consumers, to your borrowers, then you're not keeping them in the debt trap. You're not incentivized to make them revolve on the credit. So I think it's extremely important to understand the role that digital lending products or digital or buy now, pay later products play in financial inclusion. It is critical to have digital lending, buy now, pay later products to be able to acquire the merchant ecosystem through card associations, Visa, RuPay, Amex, MasterCard, through PPI issuers, e-wallet issuers, and through payment aggregators. A digital lending platform, if it has to acquire both sides of the network, if it has to acquire me, the customer, and it has to acquire the merchant ecosystem, their cost of servicing that loan is so prohibitively high that they cannot give you a low-cost loan. They cannot absorb the NPAs. They cannot offer a loan to a thin file, new to credit customer. So it's very, very important to allow these buy now, pay later companies to work with payment aggregators, card associations who've already acquired the merchant ecosystem. They don't need to reinvent the wheel and acquire these merchants all over again. So I think that's the first suggestion, to allow buy now, pay later companies to work with card associations, work with payment aggregators, work with PPI issuers to tap into their merchant ecosystem and to allow them to have incentives which are aligned with the customer, not antithetical to the customer's interest, to make them keep revolving on their credit. The second point I want to make is actually on data protection. And we keep speaking about data protection endlessly. I think the lawyers, the policymakers, even the entrepreneurs keep speaking about data protection. But I'll make a very specific point. The RBI keeps coming up with data protection norms in a short-fire manner. Don't let co-branding entities access transaction data, localized data. These are bit by bit, little pinpricks in the industry to protect the consumer's data. Without a holistic data protection law, which says purpose limitation, if you took my data for payments, don't cross-sell me a loan and cross-sell me an insurance product without taking my specific consent. Don't profile me. If you took my data for a credit product, how much can you use it for any other purposes? So without a data protection law, these bit-by-bit regulations, which are sort of reactively plugging the data usage pattern by financial tech companies, will become problematic. It will also disrupt the business model of a financial tech company which says, I'll build a payments business with low to zero unit economics. And someday I'll be able to use this payments data of the merchant and of the customer to cross-sell them a loan, which is a positive unit economics product. So I think a data protection bill which is in line with what the RBI is, how the RBI is thinking of regulating data is extremely important. Okay, that's utopian. The data protection law is far away. The data protection authority has not yet been set up. Till then, what? I think the way to solve for this interim stopgap, this kind of purgatory where FinTech is using data, there's no data protection law, so in between what, right? I think what's needed is a self-regulatory organization for specific products, for PPIs, for prepaid payment instruments, for digital lending instruments, and for digital payment instruments, where a self-regulatory organization can say, these are the basic rules of the game. If you breach these rules of the game, I will report you to the regulator, and then the regulator's wrath is directly upon the regulated entity or its outsourced service providers. But a middle layer in between, which is a self-regulatory organization with minimum basic standards, is something I think can help in self-correcting the ecosystem without kind of disruption of business models by the regulator directly. Okay, very quickly, I think the third aspect I would like to speak about is the regulation of outsourced service providers or FinTech entities. So the way regulation is built right now is that the financial sector regulator is like the sun. The regulated entities are like the planets. The sun keeps the planets in orbits, and the planets then keep their outsourced service providers, technology partners, their satellite entities in orbit as well. What happens is that a lot of times these outsourced service providers, these satellite entities, are unaware when they are encroaching upon the core function of the regulated entity. When they, for instance, start making credit decisioning, which the lender should take, not the outsourced service provider, not the tech entity. And I think that line is extremely blurred under regulation right now. What they can do, what they can't do, and what, if they wanted to do, they need to acquire a license for. So I think clarity on where the line is between core function, which an RE, a regulated entity, should do, non-core functions, which can be outsourced. The other thing I would say is also ratcheting up regulation as the criticality of the outsourced service providing entity goes up. So for instance, a cloud service provider, a TPAP, a TSP, a co-branding partner shouldn't be governed in the same regulatory framework. They all have very different criticality to the financial ecosystem and should be governed differently from each other. And right now, I think we have more of a one-size-fits-all in terms of outsourced service provision, although that is set to change. The draft guidelines have just come out. The last point I would like to make is on KYC. Again, I think KYC should be graded. It shouldn't be one form of KYC for every kind of loan account, deposit account. I think one of the most interesting innovations was video-based KYCs. Beautiful form of KYC, but it's also very expensive and very difficult to do digitally. Multiple drop-off, it's a live audio-video interaction. Another form of KYC I think can be done for small value loan accounts, small value deposit accounts is live selfie-based KYC, which is you can't upload a picture of yourself, but you do a live selfie, so there's a liveliness fraud check. But at the same time, it isn't as technologically taxing and as high friction as video-based KYC. I think, again, a graded ratcheting up of KYC based on how expensive the loan is, how large the deposit account is. Absolute last point is on customer protection. I think there is a little bit of gap in terms of implementation in customer protection. There is a fair practice code already that the RBI has issued. There are customer protection notifications that the RBI has issued in terms of grievance redressal, ombudsman, escalation of customer complaints. I think there is some gap in terms of implementation, both from regulated entities and their financial tech providers. I've taken a whole bunch of time, but I'll pause here.
Shama.
Thank you. Yeah, thanks. A lot has been said. So let me just focus on a couple of things I have here. I represent Northern Arc. Northern Arc is a debt platform which has worked for the underserved financial institutions and businesses in India over the last decade plus, done 100,000 crores plus of financing. We have underlying debt portfolio in 600 plus districts of India and pretty much present all over the country. I'd like to say two things here. One is just a little bit of what the experience in terms of lending to the so-called underserved has shown us. Our average write-offs over the last 10 plus years has been 0.3%. What are we talking here? We're really talking about the credibility of the masses at the bottom of the pyramid. And it really baffles me about the amount of discussion that happens around overlending, Is there overheating? Is too much money going into the Indian market, rural spaces, and all? We are nowhere quite there. And particularly when it comes to the more susceptible borrower, particularly when it comes to the more underserved credit borrower, here's a deal, right? I mean, let me draw upon my friend Mark Twain's definition of a banker. He's the guy who gives you an umbrella when it is sunny and takes away the umbrella when it starts raining. I think this is typically what happens to the most underserved as far as credit in India is concerned. They do not get the credit when they want it. They do not get the quantum of credit they want when they want it, and they do not get it at a cost or at a price that reflects the risk of this underlying borrower. And that's really what the numbers really are showing. So I think there's a lot of hype about, oh, should we have so many FinTechs? Should we have so many NBFCs? Should we have so many banks? I think the Indian financial inclusion story is long from done, and there is a lot of scope. It's too soon for us to worry about all of these things. The second thing I would like to say here is that there has been a fantastic financial infrastructure that has been put in place over the last few years. And I think given the nature of the country we are, given the kind of culture we have, I think it's really important to create the ability to innovate new products and structures and reach out to the masses in very, very different ways. And to that extent, I think we should have enabling provision. Of course, I understand that it has to be systemically sustainable. We can't take risks that will disturb the system and so on and so forth. So regulators are all in their right place in terms of being worried. But if you particularly speak about, let's say, 10% of the quantum of credit and 90% of the population, there is nothing gone there by way of credit that should worry us so much. If at all, I think underborrowing is a bigger problem in India than overborrowing. And we talk about the risks of overlending. We never talk about the risks of underlending. You cannot buy half a cow, and that's it. The last point I really want to make here is just going a little beyond credit, right? I do feel that the role of FinTechs, NBFCs, and small finance banks is very, very powerful. Each has their own role to play, and I think there's a lot all of them can do. I think we need to go beyond credit. I think particularly at sort of our level, we talk about financial planning. We talk about financial planning for our families, for our children, all of us who really sort of in some sense come from very privileged backgrounds. If we need to think so much about financial planning, I think as one moves down the food chain, I think the financial planning as a process becomes a lot more important. So why just talk credit? Why not talk pensions? Why not talk savings? Or why not talk insurance? And there are very, very few entities, organizations who are really focusing on this. I think there's a lot of need to really start looking at an underprivileged person in India as somebody who needs holistic financial services and not just credit. Thanks.
Thank you.
Thank you. My name is on digital and financial inclusion of women, and how it can actually be a solution for both employment and entrepreneurship. So, what we're looking at is essentially, and we of course have studies that have shown, for example, a study that happened on Manrega that showed that when there are direct deposits, combined with training for using bank accounts is when we see women staying for longer in the workforce. So how do we prioritize gender sensitivity and gender inclusivity in all aspects for all stakeholders? In this room is the stream of work that we are looking at. And we've talked about some of these things. We have Sairi here talking about credit to women, and of course that still leaves us with the fact that there is a gap in credit when it comes to women borrowers. This is something that Ms. Sinha, in fact, is very well poised to speak about. That when it comes to individual women borrowers, we find that there is a huge gap, and the aspect of credit to women is still stuck in the notions of microfinance, and still for, it is much easier to get credit if you're a member of a self-help group or of course in JLGs. But for individual borrowers, it does not. It is not like that. If we look at Mudra figures, we have figures that show that there are a lot of loans given to women. But of course, when we delve deeper, we find that those loans are in the microfinance category of under 50,000 loans. We also talked about BC's network, the banking correspondence, and we find that when it comes to usage of bank accounts, it is that women respond much better when they are being trained by women. But again, even when it comes to building up the workforce for banking correspondence in India, we have less than 10% of them. And again, it comes back to how women are not being able to join that workforce because of various issues, like the issues that actually impede them from joining the workforce, whether it is mobility, whether it is support from families, or even in terms of skilling for digital and financial services. So the whole point that the aspect that we are looking at is how can we have a holistic approach from the policy making aspect, which keeps gender at the center of it.
Thank you. I don't have much to add. I basically run a venture capital fund focused on fintech investing. I just wanted to add a few points in terms of saying that last year approximately $20 billion of capital has come into India into fintech startups, which is sort of adding to our exchequer and creating employment. A few things that are being faced by fintech startups. One of them is that the regulator has been putting out regulations, and some of those regulations have not had enough time to sort of, be set out. So there are massive regulations which have been laid out in the last 15, 20 days with immediate effect, which have sort of disrupted the entire model, and that can result in international investors not investing going forward. And I know one might think that it's not important to attract them, but we are getting benefits from that capital coming in. That's one element which I wanted to highlight. The second element Mr. Sinha was alluding to was that they are planning to pump in a lot of capital into SIDBI. I run a fund and, we do interact with SIDBI. I would urge the government to look at the manpower within SIDBI, because the quality of manpower within SIDBI itself may not be the best that you may want to have. The third is on the anti-money laundering regulations. We have very strong regulations on anti-money laundering. Unfortunately, some of those regulations are being used to a point where people have used some regulations to arrest people and shut down businesses. Unfortunately, once you arrest someone in the financial services world, beyond that, that person cannot be employable ever. And later on, exonerating the person does not reprieve that person of the ability to come back and join the employment force or run a business. So some of this is difficult for, the arrest first, think later may not be a right strategy in terms of money laundering regulations, especially when there are some transactions which might be suspicious but may not warrant arresting people immediately. So those are a few points that I wanted to lay out. I wouldn't spend too much time. I'll pass it on to the next speaker. Thank you.
Thank you.
Good evening, everyone. It's Ketan Doshi from PayPoint. We are into distribution of financial services to the last mile. We distribute our distribution happens from 64,000 touch points, which are in the rural locations. We cater to banking needs, the basic banking needs under the BC model. We run a wallet, which is again focused towards the rural population. We aggregate loans, insurance, and investment services. and dispenses at our touch points. So what we have seen is there are three basic problems in the entire financial inclusion piece. One is access. There's limited access at the last mile, which is a rural location or a hilly location or a remote location, say in Assam or Chhattisgarh. Lack of assistance, because the person who is coming on board, he doesn't know what is the service like, what insurance is, and or what an investment tool is, or maybe how to apply for a loan. So assistance and efficiency. Now, financial services which are delivered at the last mile, the ticket size of the financial services is negligible vis-a-vis the service which is accessed by a urban location. So the ticket size is almost 20% of the ticket size in a urban location. So to service this ticket size, it needs, it needs a really efficient system. So the problem is in a rural location of Chhattisgarh, where a customer is walking 4 kilometers just to do a withdrawal of money and goes back again. So he's wasting half of his day in the entire transition. So his half of the day's wage is gone. So these are the problems which we are facing. Right now, JAM, I feel, has almost, opened up the entire market. The three problems have been addressed under the JAM piece. But I think there is a very big headroom in terms of, first, right now we have seen, say around 95% of households have bank accounts. Now they have just come into the banking system. Now people are waiting for the next phase of financial inclusion, which will be lending, which will be investments, which will be insurance, etc., etc. And I think we've just begun, and I see at least 2 decades of financial inclusion happening, and we'll see growth all the ways in all the, all the service providers, FinTechs will see a huge growth. Answering to the question on with regards to partnership, I think the financial institutions, banks, insurance companies, etc., etc., everyone has opened up partnership models, and partnerships are happening. Only thing is partnerships are generally uneven because we are dealing with big banks or a big daddy, and it's generally uneven. So we'll have to live with it at this moment. But as a FinTech, we are a nimble player, and we'll have to still live with the big daddy role. Sometimes norms set up by the big financial institutions or banks are so skewed that FinTechs do face problems. But still, the ecosystem is building up very fast. In terms of some regulations, which is not regulation, some acts which are actually hindering the financial institutions, like the BCs or the wallet companies or the payment companies, we are regularly facing issues from the ground, from the sub police stations or etc., where a wrong UPI transaction or a fraud UPI transaction comes into the payments network, and the entire escrow account is seized, whereas the amount is very low, maybe say 700 rupees, and the escrow has say maybe 100 crore rupees, and the escrow is seized for a day or two. Unless until we reach out to the Jharkhand or a Chhattisgarh police station, tell them, explain them the business model, then they understand that this is okay, fair, they open up. But the entire day's transaction and settlement cycle is lost. I think we need to address this quickly, and or else we are really happy to see this business growing. Thank you, sir.
Hi, good evening. Govardhan from the Economic Times. So coming from a tribe that is always skeptical of anything the state declares as an achievement, even we have to accept the digital kind of transformation that has happened and the payment technologies that have evolved. So a couple of points in terms of last 10-15 years, we have experience about the microfinance and small finance bank. But one thing I keep hearing from everybody is that
though you get the people into the financial, what happens that the banking habit, like in the sense, it's not, they're not used to, so it's not there well into their minds. Like, for example, no, not keeping the minimum balance, or the penalties, or missing the deadline for payment. So that is not there. And once or twice when some of these things happen, what happens is that if it is questioned, then the customer doesn't come back to the bank at all. He goes away once and for all. So that seems to be one of the major problems for a lot of small banks, And the second one is that small finance banks, so, there's a lot of talk about the credit, and it's the financial inclusion is more about credit. But the thing is that it has to be more of a two-way kind of an engagement. It is not only the credit that I also keep my money in the bank. So that's why I come to know about what people talk about, the insurance and healthcare and all the other that you. So it's a kind of an engagement for more with a small finance bank than as a kind of an NBFC model or an MFI model, and to make that small finance bank a bit more kind of a less expensive. Probably the reserve ratios that the RBI has mandated them could be actually brought down, so that they have more money to lend, and the cost of funding also goes down, and they get better margins. That's it.
My name is Madhukeshwar Desai. I run India's premier arbitral institution. I'm also the All India Vice President for the BJP Youth Wing. Thank you, RF, for inviting me here, and it's always a pleasure to be under the same roof as Mr. Sinha. I'll make a quick comment and then a question. I've been listening to everyone around the table, and it's fair to assume that everyone agrees that yes, financial inclusion has been going on well, the government has made positive steps. The way that we look at financial inclusion, at least from what I gather over here, is lending money to individuals that run either small businesses or allowing them to grow their businesses in some form or the other, or allowing them to make money. I would like to offer another perspective, which is somebody that earns 50,000 rupees today has a lot more access to consumer durables as opposed to, say, even 3 years ago. Is this going to lead to the Americanization of the Indian young, which is you have hyper-consumerization, if that's a word, and you have people that move to actually use their money to buy non-productive assets? And is this something that, while I know the entire table will disagree with this, is this something that the government should look at? The other aspect that I would like to highlight is there's a difference between being financially prudent and being financially literate. You may be financially literate, but that does not mean you're financially prudent. And the example that I would like to demonstrate for this is the number of people that the Bitcoin exchanges got on board as opposed to Zerodha or your traditional HDFC, ICICI Bank and everyone else. I think that the cost of consumer acquisition was zero for them. So what do we do in this sort of scenario where you will have the access to credit for, say, personal consumption and the lack of financial prudency when we look at the broader question of financial inclusion? Thank you.
Thank you. I'm Shachindranath. I'm founder of Ugrow Capital. So for those who don't know about us, I'm born and brought up actually in city of Banaras. Spent my first 10 years in Mirzapur. He spent then 15 years in a large diversified financial services corporate, was thrown out from there in 2015, and then decided to build India's largest SME financing business. Now, whether the role of and I straight raised 1,000 crore of equity capital in 2019, and over a period of last 3 years, we have done 6,440 crores of worth of loan, 28,000 SMEs we have financed, an outstanding book of 4,000 plus crores. India is actually, the role of a FinTech or an NBFC in inclusion, there is actually nobody else who does it. It is only the FinTechs or NBFC or SFBs which are doing that job. But the question is not that. Hamara desh na bada ajeeb desh hai. I always keep saying that there are two sets of people who are blessed with Lakshmi and people who are blessed with Saraswati. If you are blessed with Saraswati, you are expected to ask Bhiksha. And that is why in our country, there is not a single temple of Devi Saraswati, but Lakshmi is being, har koi jaake uski puja karta rehta hai. So we are, while by constitution, we are a socialist democratic republic, but actually we are the most capitalist country. जब भी किसी large bank, financial institution किसी को भी जब पैसा देना होता है तो फिर वो लार्ज कैपिटलिस्ट को ही देता है। तो 1000 करोड़ की कैपिटल रेज करने के बाद भी स्टेट बैंक ऑफ इंडिया के जूनियर मोस्ट ऑफिसर से लेके चेयरमैन तक के सबके सामने हमको खड़े रहना पड़ता है, क्योंकि वो पैसा जो है ना वो ड्राइव खाली कैपिटलिस्ट को ही होता है। Now how this would, we can't do much about it. Obviously we are proving that to be wrong, that without having a capitalist behind us, still we can do it. I am confident in by 2025 our mission is to do 20,000 crore worth of financing, service at least 10 lakh small businesses in India, and we'll achieve that, I have no doubt about it. But I think the only way it can get solved is when government intervene with its social responsibility, especially for MSME financing. Because today we have 11 crore people employed, we have to take it to 20 crore people. 20 crore people employed by MSME means at least 35 crore lives which will get supported. 6 crore MSME has to go to 10 crore. GDP contribution has to move from 30 to 45%. And then only the chances of political, social unrest not happening, because people will be well fed. Employment would be generated in hinterland of Jharkhand, Bihar, Rajasthan, UP, Gujarat. The only way it would happen, banks, financial institutions, and large corporations would not walk the same path which we are doing. So the government has to come with this large pool of guarantee capital for financing MSME, and this massive liquidity which is sitting in the banking system has to move towards FinTech NBFC of this form. I did a study and saying that if government of India for next 5 years have to guarantee every MSME loan and charge a cess of 2% on every financial institution, it would still make money, because the loss ratios in MSME financing cannot go beyond 4% if done prudently. Mr. Sinha, you will be amazed to know that of the 6,440 crore worth of loans which we have done over a period of 3 years, of which 1.5–2 years was COVID, we have done 100% of our lending only on basis of GST and digital banking. We don't ask any customer a single physical document doing this loan. And now even State Bank of India and Bank of Baroda and almost 7 public sector banks have actually accepted us in a co-lending model. But this need to be accelerated. So we are the beneficiary of the digital infrastructure and we are using it exponentially. But the problem of that we are being dragged about not getting capital from mainline financial institution, because their acceptance of doing a credit on a GST data or a digital banking data is still very, very hard to convince them. But if you give them any form of a guarantee, emergency credit line, partial credit guarantee, money just starts flowing, right? So eventually, anyway, 70% of banking is owned by you. You only provide capital to them. You do an off-balance sheet support system, and they will start flowing money to us. And this inclusion would happen very quickly.
Have you read our report on the Vyapar credit card?
Yes, we have. So we are, sir, along with SIDBI, on GST Sahay, we are a collaborator. So Government e-Marketplace, GEM Sahay has been, along with iSpirit, we have piloted it. For Government of India, we are hosting it in our cloud free of cost.
Namaste. Chetna Gala Sinha, Mandeshi Mahila Bank, Cooperative Bank, which is not on the list. I mean, SFV sub hai. I started bank 2.5 decades back. Or we started because women wanted to save. That is the one thing. And so it was started basically the first rural women's cooperative bank in India where women wanted to do savings. And Mr. Paul, you talked about partnership. Our biggest partner is Postal Department. And when I say that, I would also like to share that how it defines which partner you have and how log kaise aate hain. I mean, we have 100 digital Didis who will celebrate 1 million women saver on digital platform in 2023. That will be a celebrating year. When I'm saying that, what I mean is that digital banking as I do believe that, as Shama, you mentioned about the financial planning, I would say that women want to actually do their financial and wealth planning. It can be buffalo, but that is a wealth for me. It can be goat, but that is a wealth for me. So I would just say here that the population of India feels very pride when it comes to digital. And when they get that opportunity of being a part of that digital platform where I don't even was thinking of opening an account, we got a woman coming to the bank and she said that मुझे सुकन्या योजना का account शुरू करना है. And that was a very कि गांव की महिला सुकन्या योजना का अकाउंट शुरू करना है और वो बैंक में आती है सेव करने के लिए अपनी बेटी के लिए. How many, I just started questioning my bankers, my staff, my team. How many of us have thought of that? That she wants to save for her daughter under Sukanya Yojana. She knows that. But she doesn't know where should I go. And she comes to Mandeshi Bank. That is an achievement for Mandeshi Bank. कि वो ऐसे सोचती है कि ये जगह है कि जो मैं मेरी बेटी पे बचत कर सकती हूँ. Why I am sharing this example also is that saving, giving me pride, being on digital, getting me pride, these are the things where the Bharat is experiencing today. So with that, I would say Mandeshi Mahila Bank, we are doing all mobile banking, digital banking, everything. But some points I would like to share. Number one, SIDBI, we have a partnership with Prayas, but our first condition is that individual borrower, first time borrower, no CIBIL rating, no credit rating. First time borrower है, उसके बाद credit rating हो जाएगा ना अपने आप. So the Prayas was, we were the first people to say that to Prayas in SIDBI, and I'm glad, Mr. Sinha, that now SIDBI chairman is visiting Mandeshi because these were the first time borrower which came under Prayas. Now, second thing about Jandan I would like to mention. Jandan, opening account, great. Overdraft facility, how much has been done? And actually, Mandeshi is the first bank where Reserve Bank of India did the study on our product, where we had started an overdraft facility for street market vendors who wanted to do daily savings and daily repayments. I mean, we were discussing, right, about that daily saving and daily repayments. We have 100 digital Didis, banking correspondents who are doing daily savings and daily repayments of all digital all mandis. And in India, we have 74,000 mandis. Actually, Mandeshi has only reaching in Maharashtra. We are not even going outside Maharashtra. But imagine the potential, 74,000 weekly markets in this country, and if they come on digital platform, how much potential we have for our street vendors. And I see that is where we have to, like that type of Vyapar card, if we have for street market, street vendors, it will actually provide such a big opportunity for them. So that is second point which I would like to make. And again, I would say that the third, which is about we are talking about the trust. I am talking about that जो गांव में महिला है जो डिजिटल बैंकिंग करती है उसको लोगों को लगता है कि फिजिकल प्रेजेंस चाहिए, राइट? दैट इज अगर फिजिकल प्रेजेंस चाहिए या नहीं, पर वो वॉइसेस कान पे पड़ने चाहिए. व्हाई शी इज टॉकिंग अबाउट सुकन्या योजना? Because somewhere she is thinking that my portfolio is being discussed here. And how do you do it? You can do it on WhatsApp, you can do it on, and she gets it. But the doorstep hearing of her complaints is the most important. And what our digital Didis, the first thing they do, saving, credit, yes, but what are the doorstep grievances they have? And here I do see that how do you get that doorstep grievances? I would just like to add, Mr. Sinha, that I'm so proud that we could create a platform for women who had actually defaulted. Their husband had run away. And we started the special table in all our branches that all women who have had this problem, they can come to us. We will address that. We will bring all when you talked about partnership, Mr. Paul, I see that there is a consortium for the defaulter in the banking system, Why can't we have a partnership here? Because unke to husband bhag gaye sab jagah loan leke. And then how can we deal with that? So that, Kshama, I was thinking that that is where our financial planning and all, we can initiate those discussions. And whatever I'm talking, I don't want to talk about pilots or, what Mandeshi has done is something great. What I'm trying to say is how can we create those public goods here that, those have been, jinka rating sab jagah se kharab ho gaya hai. Do we have a digital platform for those people? Because if we don't give a confidence to them in the beginning level, they won't be able to do the prudent banker, as you mentioned, right? Because it's not that. Financial literacy ho sakta hai, I may learn. But to do the prudent banking and deal with the cash flows what I have, and I really appreciate when I heard of Vyapar, Mr. Sinha. Very, very, because kitna bhi ho, ये आप तो 1000 करोड़ की बात करते हैं और SBI करती है ना ऐसा. अरे 5-7 करोड़ वालों का तो क्या हालत होता है जो महिलाएं नहीं है, सादे बिजनेस करते हैं. Anyway, what I'm just saying that I've learned a lot from our women, and I just humbly want to say that we have a women farmer producer company. They are doing warehouse receipt financing, Mr. Arun, and it's all these that how much wisdom they bring. Have we created those digital platform where this wisdom from these women who have never gone to high school, but they are using digital banking. So I would end here and I would request Mr. Sinha that can we have a public good on a digital platform where the learnings of these women who have never been to the school, but they are using digital platform, digital transaction, they are saving digitally, using digital transaction. Can we create that public good on the digital platform where the whole world can learn from it? And with that, I'm just sharing that these all experience I am sharing today, actually we are documenting with World Bank and IFC, but नहीं, मुझे इंग्लिश स्पीकिंग वर्ल्ड के पास ये सब कहने में मज़ा नहीं है. मुझे कहने में मज़ा है नॉर्थ इंडिया में कि बहुत कुछ हो सकता है. एंड आई वुड जस्ट लास्टली mention कि being a part of G7 Gender Equity Advisory Council, I've been talking about it, individual lending. Okay, defaulters, fine. In India, postal services, these are the biggest partner, and every village have, and the humility they have. I mean, we are in district, with Mandeshi Bank, the postal service partnership has been really very good. You can imagine in one day with postal service department, we started 7,000 Sukanya scheme, Yojana, and it was all digital. So I would just end here, and I would just say that this was such a wonderful roundtable, and I do feel that so many voices can be brought in here. Thank you.
Thank you, Jagdari. Sanjeev.
Thanks. The last word. So I'll just give a background about myself. So we introduced India's first exchange traded funds. We conceived in our previous avatar the first gold exchange traded fund. Post that, we are focusing on what Mr. Sinha said about digitizing the commercial vehicle sector, especially on the smaller end of the curve, which are 5-10 trucks, getting the transactional data and helping them to manage in terms of ERP, if you want to call it, and provide them loans based on flow. So that's something we've been working on, and we have about 3 lakh trucks on our platform. But that's one part of it. We think basically it'll be a little different from everybody who says that right now, I think the biggest problem we face in our fintech world is that basically actually we don't have we are unwilling to basically look at regulation. I think it's very important. Reserve Bank of India is catching up now. And I think it's very important for Reserve Bank of India to catch up because, we've seen how credit has been given without understanding what they are doing. Without actually the borrower knowing what they are doing. And I think the first time in a few days back, the Reserve Bank of India came and said, look, this is not the way to catch. One of the questions, which Malini posed was that why is regulation not catching up? In my view, regulation is catching up. The speed at which digitization happened in India, I personally believe was that, basically regulators were not were not up to it in a sense. They were really seeing what was happening, and I think now they're catching up in terms of really what's happening. Second is what we are trying to do is, that's why we are trying to basically, put everything in a banking space. So we are trying to basically convert a cooperative bank into SFB so that we actually remain in the regulated space. And the last point I would make is one of the things we learned in the gold, when we did the gold ETF, is that in India, people save, people, the people who really work for you in Sukanya and things like that really invest in gold, physical gold. We think, the biggest problem in India is, the import of gold. Actually, we have regulation which allows people to save in banks, get gold prices, and we think, we want to basically approach that so that basically, we don't import gold, but we get gold prices. So that's what we're trying to do. So.
Thank you. So may I just quickly run through some of the points I picked up as we went along. So one was this whole issue of the pace of regulation and the issues around customer data. The other thing was the issue that you raised about incentivizing some of the stuff that happens, Vijay, what you said was also about, diversification into investment products at that level. You also talked about, India's love for reservation, but in the banking system, priority sector lending is an age-old thing. The banks especially are very used to conditionalities of that kind. And some of them do get incentivized as a consequence of that lending. So I guess some of this may be about, downstreaming some of that stuff. Then the issue of Aparajita's, concerns around both the credit card framework and how you kind of, are encouraging a credit culture which may be unnecessary or more than what is sustainable, and the issues around data protection, graded KYCs, and the whole BNPL challenges. Shama, of course, talked about things like, we talk about all these challenges. We don't address the issue of adequacy of credit and availability. Sunaina, of course, raised again the issue of BCs and the representation that women find in a very important chain, especially when it comes to familiarizing, downloading, creating literacy around this whole world and the whole gender bias issue. Aparajit talked about the pace of regulatory change and the disruption that might be causing. Of course, there were some other issues with respect to quality of people at SIDBI and AML and things like that. Ketan talked about the access, lack of assistance comes back to the same thing, the last mile. Is there a system that we have for hand-holding to go from a total unaccessed situation to a much more mature, accessible, access playing in the digital world? The question of local level harassment and all, I guess Mr. Sinha may not be necessarily the person, but I'm sure there will be conversations that can happen, because it's a very micro level issue at some level, and becomes, unless there is a very enabling policy environment around that, it's difficult. Fear of returning is a real issue, Gordon, because I know that especially when it comes to bank charges and some of the issues we face around irregularity of the cycles. And people ask for very structured regular. That's how banks were trained, right? And then when something is uneven in terms of the earnings and expense cycle, it causes great distress in the banking system because we can't deal with it. Madhukeshwar, of course, talked about the whole concept of financial literacy versus prudence. I think the challenge today is, I guess this has to happen sequentially. First, people have to get comfortable with usage, and then when they start using, the issues around, are you overdoing it? Are you extending, overextending, all of those, and the education around what is capacity for credit, what is capacity for doing business. And we also, in terms of what Sajanan said, I think one of the big issues is also the fact that, the pool of guarantee capital that you were talking about. I think downstream what happens is, even regulators in our country are used to, there is a certain inertia and familiarity, coming out of familiarity with a certain set of organizations. Newer players downstream are still a bunch of, a community that others are not that familiar, especially some of our regulators. The newer regulators are better off with this. And the other issue which may be necessary in this context is the SRO, because you need that, mechanism of self-regulation in the absence of familiarity and availability. I think Chetnaji has given a long list, but to me what resonated was this whole issue of, creating a Vyapar card in the context of select communities, and mandis was such a powerful idea, I think, given the numbers. And if you're talking about 74,000 mandis and a couple of thousand players in each of those, you're talking about a huge audience there. And certainly I resonated very well with this concept of taking feedback. Digital redressal is one issue which is out there today, because very few people are familiar on how to deal with problems, payment drops, digital issues. But the other bigger issue is how to fine-tune, things based on real live knowledge from the ground. And that feedback is something that we should create an institutional mechanism to capture. And I know we work together on some of these things, so some of this, what you are doing is wonderful. And Sanjay, I guess, regulation, you want it, but we don't have enough of it. Some people complain we have too much of it. Some people say we have, stuff happening irregularly. So I think, Mrs. Sinha, floor is yours to respond. We have a whole bunch of issues here which maybe you can just touch upon.
No, thank you very much, Paul. And with FinTech in India, based on all these comments and then, this masterful summing up that Paul has just done, I picked up 3 or 4 themes that have consistently been expressed by all of you. And let me just offer some thoughts and observations on these different themes. One theme that I picked up, which is very, very relevant at this stage as we move to deeper financial penetration, deeper availability of financial products and services, is around consumer awareness, consumer education, and risk management. We've seen what has happened with microfinance in the past, where there were concerns about people borrowing from multiple different lenders and not having visibility on how much had been actually lent to one borrower, which then resulted, as Alok and others know well, with a real pullback as far as microfinance was concerned. Obviously, we have seen in other countries around the world many credit boom and bust cycles when credit became too plentiful, too cheap. The whole global financial crisis was triggered by ninja home loans, of course, no documentation, no due diligence, nothing. Everybody just got a mortgage, led to an unsustainable boom in home finance, and then, of course, a global financial crisis. So we've seen these credit boom bust cycles many times when there's not adequate risk management, even from either a borrower perspective or a lender perspective or a regulator perspective, in terms of systemic buildup of overly easy credit and so on. So we've got to really think carefully, are we getting into a situation where we could have one of those kinds of cycles in India if you're not careful? And that requires everybody in the ecosystem to collaborate, to Paul's point earlier, and to be very vigilant about these matters. But it is something as a policymaker that I will take away, that we need to be very alert to and to think about that. One very obvious example of that is what has just happened with crypto. We've seen the classic boom bust cycle on crypto right now. And all of us, I think, have experienced a situation where people we would not have expected come to us and ask us about crypto. That has happened to me extensively in the last year or two. And now, of course, we're going through a situation where people are really hurting because of, not knowing what they were really getting into. So consumer education, risk management across the ecosystem, prudential lending, prudential regulation, all of those have become even more important because of how effective we have been pushing out all these digital financial products. So there's obviously that risk that goes hand in hand with access, with availability. The second theme I picked up, which is related to that, is around data protection and privacy. Of course, we all know the work that's been happening there over the last few years. The data protection and privacy legislation has gone through very detailed and intense scrutiny. It has been submitted to Parliament, and it is in front of government right now. So let us see what legislative steps are undertaken now. But I think we now have something that has been vetted and scrutinized extensively, both with the executive, that is with the government, as well as by industry, ecosystem participants, and by legislators. So I think we will have a very robust and far-reaching data protection and privacy legislation that really will address many of these issues. That being said, we obviously recognize that this is an area that keeps evolving very, very quickly. And so, of course, we will have to continue to be vigilant either on the rulemaking side or on the legislative side. As we have seen, for example, with the insolvency and bankruptcy law that has been amended many, many times, or GST, which has also been amended many, many times. Because when you bring in far-reaching financial legislation of that kind, markets respond, ecosystem participants respond, new risks come up, and so regulation becomes a very dynamic, continuous process. And that really is my last point, which is as we build out this miraculous digital financial infrastructure. Paul, of course, was kind enough to call it spectacular. Many of you have spoken about it. What we have in India is completely unique. There's no other country that, as I said earlier, has a digital financial infrastructure that we do at the affordability levels that we have, the accessibility levels that we have, and the volumes that we have. There's no other country in the world that matches that. And I think our colleague from Canada highlighted that many advanced countries don't have this type of a digital financial infrastructure. I think it's going to be a very, very important aspect of our comparative advantage, our global competitiveness going forward, that we have this extraordinary digital financial infrastructure. However, that requires all of us in the ecosystem to continuously be alert and working together, collaborating to continue to push the envelope in terms of innovation, in terms of balancing risk, privacy, all of those things. And I will just emphasize that regulation, lawmaking, all of the work that we have to do as policymakers is something that is a continuous process. It doesn't stop. It continues because all these things evolve over time. And you've pointed out many areas where regulation, rules, policies can be improved and strengthened. I've taken note of many of those. And this is a continuous process of engagement, of getting your inputs, getting your feedback, and working on that. I'll conclude my remarks by saying that we should think specifically about some of the key regulators and enablers to this whole ecosystem. RBI obviously is a critical part of this whole ecosystem. We've had many, many rounds of discussions at the highest levels at the RBI about their regulatory capacity, their ability to support innovation, their ability to work closely with ecosystem participants. That's very much part and parcel of our discussions that we have continuously with the RBI. The RBI is a statutory body. It reports through Parliament to the people of India. So it's a very productive set of interactions we have continuously with RBI. Obviously, there are other important regulators like IRDA and PFRDA that we talk to continuously to be able to expand the scope of what they're doing, enabling micro insurance, micro investments of various nature, because once you build this digital financial infrastructure, then there are many other products and services that you can deliver for which other regulators as well have to be on board. And then, of course, there are these very important financial institutions like NABARD and SIDBI that are able to bring together and enable the collaboration that we need, that are able to provide wholesale lending, which is very important. Regional rural banks, of course, get the support from NABARD. Similarly, many NBFCs get supported by NABARD. And it's very important because we always have in these situations a collective action problem. And these collective action problems can be addressed by institutions like NABARD and SIDBI. So they're very pivotal institutions in these ecosystems. And I would encourage all of you to engage with them, to work with them. If there are issues and challenges in doing so, please raise it with them, let them know, raise it with parliamentary committees, raise it with policymakers, and let's really make sure that we strengthen and improve the functioning of these institutions. Now, whether it's India or any other country in the world, Fannie Mae, Freddie Mac are examples of important financial institutions that have played a very shaping role in the growth of the financial system in the US. And similarly, NABARD, and of course, we need SIDBI also to play that same role with the MSME sector. So I'll just finish by saying the following, which is that because we have such a unique and such a broad-based digital financial system now, it's evolving fast, it's improving, there's been tremendous innovation that's happening. It's all the more important for all of us to collectively work together to see where the issues are, where we need to put more effort, new regulations, and whether it's innovators, whether it's self-regulatory organizations, policymakers, regulators, all of us need to work together. We are always, very, very interested in your feedback and your thoughts. You can send it to us in writing, for example, to the Parliamentary Standing Committee on Finance. You can come and meet with us. You can send us your white papers, your research ideas. I'm sure RBI will be very open to your suggestions, as will be the Ministry of Finance. So it's extremely important to keep this kind of interaction going and to learn from your real-life experiences, as we have some of our industry's most important senior leaders with tremendous, tremendous real-life experience. Your experience, your understanding of these matters is invaluable in shaping policy. So thank you again for all of your excellent, excellent inputs. Let's keep this interaction going. Let's keep this dialogue going. Thank you. Good night.
Good night. May I now request members of the press, in case they have any questions in attendance? Any questions? Yeah, sure.
What Shastha's idea on, in the interim, while the government is working on the big data privacy legislation, etc., what she mentioned about having, in the interim, to have industry regulating itself, whether it is on, having, whether it's prudential credit behavior, creating awareness, like NSE runs campaigns on a whole lot of things, in building awareness about stock markets. I think similarly, I think the need of the hour is, rather than have a knee-jerk reaction, it is also responsible for those who are creating and building the market to ensure that the credit behavior is in line with, the appetite of the borrowers. So I think, like financial literacy, and I think some of us talked about financial literacy, but I think the understanding is that financial literacy is still, I think, a spec in this country. People don't understand. Even educated people do not understand, the kind of borrowing that they should, repayment cycle. People think borrow first, and if it's easy credit, I can repay it at my leisure. Right? And NBFCs often at times encourage this behavior. I was talking to NBFC yesterday, and they said, the daily stamping, which has been instituted by RBI, is a problem because, for 3 months, sometimes they don't repay, and then they come back and pay. So I said, but they are daily wage earners. I said, yeah, but for 3 months, if the daily wage earner is not repaying, that means he's having a problem, or he doesn't want to pay. He thinks that he'll get away by not paying. So what I'm saying is that I think that that's a very crucial issue, and her suggestion could be considered is a stopgap, where the industry regulates itself, comes up and gives the government a roadmap on what they are doing in terms of regulating, consumer protection, building awareness with borrowers parallelly while they are being given loans. I think that is an idea. Would the government be open to that?
Well, I don't speak for the government. As I said, I'm a legislator. I am not a member of the government. But I think everything you're saying is exactly right. I totally agree with you. We have to start in the corporate sector with responsible behavior. I think that's something that we can all agree on. And by and large, I would say that 99-100% of the time, financial institutions are very, very thoughtful about how they engage with consumers and so on. There will always be a few that don't, and that's where self-regulation becomes very important. Board members become very important to try and rein in that kind of behavior. So it has to start with institutions being very responsible. Point one. Point two, there are self-regulatory organizations, obviously like MFIN and others, that also have a very important role to play because they define codes of conduct, standards, norms, and if you sign up for that and your board is supposed to, have you follow through on it, that becomes a very important line of defense for the growth of the market. And Aparijita was exactly right that there is a gradation of regulation. It starts with, just responsible behavior, then self-regulation, then finally to regulated entities which are directly regulated and supervised by the regulators. The regulators have obvious constraints in terms of their capacity. They can't go in and scrutinize every transaction in every financial institution. And that's why we have to start with responsible behavior with the financial institutions, and then there is a gradation of regulation that goes on. So we have to really keep those standards high. It's very, very important to do that. And all of you as participants in the industry also have a watchdog role to play. If you start to see practices that are out of line relative to the industry standards that you all have agreed on, then you need to highlight those. You have to raise them with regulators and so on. So all of us have to participate because ultimately this is something that benefits us all. If we are able to have a well-functioning ecosystem where deviant behavior is very quickly picked up, that helps all of us and ultimately enables growth and better products and services.
Well, thank you, Mr. Sinha, for joining us this evening for this very engaging discussion and lending us a very, very kind ear. I mean, the weather has been bad on the northern frontier of the state, but he's still coming. So thank you very much indeed. I want to thank all the participants for such a lively discussion. Thank you for your time this evening, and you each have been very, very kind and very, very participative. Thank you very much indeed. And last, I want to thank Paul Abraham for moderating and curating this discussion so beautifully, and I don't think anybody could have done it better than Paul, so thank you very much indeed.